The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to start out our show today with the usual DAX charts, starting with the 5 minutes, then the 60-minute, and then, of course, the daily. What this is saying is that we're up against some very critical resistance on these charts. Whether that'll remain to be seen or not, we'll have to let history tell us. But before we get into the next chart, which is going to be the gold, I would like to mention that I heard from Norm Winsky last night down in Florida. He was in Naples, of course. He had left the city for safety. He had got back, and the only damage he had was he lost a mango tree in his backyard. That was the only thing that happened. It didn't hit the house or anything, and it was... it was okay, everything. All the trees in his he has a 5-mile brick driveway going up to the estate, and none of the big trees along that 5-mile drive were damaged, so that was a good thing. We'll have him on just as soon as he's up and running with his computer, but he does have some, electricity is running there right now. He's one of the few places in Naples that has electricity. Rich Anderson will be our guest on the half hour, and of course, Rich has a place there in Naples also, and he'll talk to us a little bit about what we're watching here as we're looking at some of these things. What I wanted to do now here is to go through a sequence of some of the things that we've been watching here in the market here over the past few days in the gold market. If you'll recall here last week, after we hit that high in gold, we were looking for a relatively serious correction here down to around $34 an ounce drop, which would take us to the 61% retracement at the 1327 level. We hit that level yesterday, and I wanted to bring it to your attention here so you'll be able to see it, because let's just get this up here 1 second, and then we'll show you. There's where we came to last night. We'll get this yesterday morning, right when we were on the air, of course, and we did hit that exact number, and we were able to rally a little bit. Now, this is what I'd like to bring to your attention, because one of my strengths is short-term trading, and I wanted just to give you an idea of what I see happening in the gold market this morning. Here is where what happened between when we were on the air yesterday and last night. Now, this is an hourly chart, so it goes back all through the evening. And if you take a look at this, you'll notice that we were looking for the market to hit a 382 retracement, and we hit it exactly head on at 1340.50. That's been the high. Now, so far today, we've not taken out that high. Folks, to me, from a technical basis, this is the ball game in the gold market, because if we can get above 1342, 1343, that's going to tell us that this is a pretty substantial correction that could lead to much higher prices. But on the secondary front, if we get below 1326, we've set up a tremendous ABCD pattern. If we're down $34, this next one is going to take us down $64, and that's going to take us down, in below the $1,300 level without any trouble at all. So that's why looking at that number is so very, very important from a technical standpoint, the fact that we hit that 382 number, and that's pretty much what we're doing. We're doing the exact opposite in the Japanese yen, that we talked about that yesterday also. So we want to keep a very close eye on that. Now, since the news of the day happens to be in the Apple, let's just take a look here at what Apple did yesterday after the big the big promotion. By the way, I did watch that. Didn't understand a whole lot about it, but at $999 a phone, I think I'm going to hold off, maybe till Christmas of 2062. That's a lot of money for a phone. Anyway, if you look at the 15-minute chart on Apple, it has some pretty good volatility yesterday. As Tom O'Brien pointed out, it made new highs on marginal volume, and yesterday it had monster volume, and it didn't even close higher on the day. That's not a good sign on a technical basis. I know that the phone is a spectacular piece of technology, but boy, oh boy, that's not for the it's not for the masses, that's for sure. But if you'll notice on this Apple chart, it has some beautiful ratios. We had a really nice 61% retracement up into 163.54. It backed off to 160 and change, made an ABCD pattern at 164, and then it went straight down. And this was all during the time that the promotion was going on, folks. It was really, quite exciting to watch it. Of course, I haven't seen the phone yet, but I'm anxious to see what you get for $1,000. But that's a pretty good deal. Mine is I have a beautiful LG version, and it does take text messaging, but I don't do Texas. I'm just not too good with that. Anyway, we'll see. We'll see how these markets unfold here for a little bit. Now, I want to move over to one thing to cover it because I think it's relatively important. Jeff Grunluck, who's a really smart guy with Double Line Hedge Fund, he shared a chart on the 10-year yields and shows you what's been happening with this market over the past years. You'll see that we actually made a high, way back in July July the 8th of 2016. What he's expecting a big spike in rates. And I agree with that. And the reason why I agree with it is a totally different pattern. And that happens to be this pattern that we've been watching here in the Treasury bonds. Now, they broke it a little bit, about 3 handles off the top. But as you can see here, over the past few months, since April, we've made a perfectly symmetrical 3-drive to a top pattern. The ABCD structure from May through July hit it exactly spot on at 158.18. It was also a nice expansion up there. And in between that, if you'll look at the time between July and September, you'll notice another ABCD pattern that is forming at the same time. And of course, this looks, very interesting. However, if you look at it from a from a much longer perspective here, like we would do if we were looking at the Treasury Notes, you'll see that this is nothing more than a bear market rally in notes and bonds, which means interest rates should start to go higher. You can see from this, Treasury note on the weekly chart that this is certainly a head and shoulders pattern. And notice that the right shoulder is so much lower than the left shoulder, and the harmony between the left shoulder and the head and the right shoulder is spot on. So, and then not only that, but you've got that dark red line there that touches that right shoulder, which happens to be that 20-minute line that can act like a fulcrum. So this is really interesting what we're seeing here in notes and bonds. We're going to take a little break here. 877-927-6648. Rich Anderson at the break.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhoades, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we've had a request to take a look at cotton. And as you can see here, you know, we had a tremendous move in cotton. It went limit up for 2 days, and of course, you can see that it turned around and went limit down for 2 days. I don't trade cotton. I haven't in the last 40 years. I don't expect to now, but I did look at the chart. The one thing that I would look at from a technical standpoint is if you'll notice on the double top that just occurred 2 days ago, you'll notice that we were at that top 3 days in a row, right in the midst of the big storm, that Hurricane Irma, that was coming up from Florida. And that's what was causing this problem in cotton, because if it had continued on into South Carolina, which is a big cotton producing state, that would have caused bigger problems. But as you can see, the market was bouncing against that double top and couldn't get through it. It made a new high by about 10 cents from 4 months ago. So there was certainly no buying at that level. And then you can see what happened when the weather abated, and down it came. All right, now let's take one other look. I wanted to show you a failure pattern here because this is a very interesting chart because it started out really good. Let's take a quick look here at the October Hogs. As you can see, when we got down to that ABCD structure at the 1.618 level at $60, we had a really strong rally. We rallied 4 cents a pound, which is roughly $1,300 in hogs. And then we backed off relatively quietly and was expecting the 61% retracement level to hold. But as you can see here, yesterday the hogs gapped down below that. That was your first danger signal that something was not going to be working. So, you had a really easy spot to get out. And we did make new lows. We got all the way down to the 59.45 level. Now, there's a possibility that they reverse from here, but frankly, the odds, I think, are not good for hogs to rally up. Now, the cattle still seem to be okay. They've held that 104.50 level. We got up to 108 in the hogs. We're trading at about, in cattle, we're trading at about 106.80 right now in the cattle. So we'll see. We'll have Rich Anderson on at the break to discuss the grain markets. We have a really interesting pattern that Jeff Grunlock brought in about commodities. I think that is really important. It goes back over 20 years. That's one of our favorite patterns, the ABCD pattern, that we'll share with you when Rich Anderson comes on, because Rich is the one who sent it to us. But those are some of the things that we're going to be talking about with Rich regarding grains and a few of the other things that are happening. One of the questions this morning is about that bond market, folks. All I can tell you is the bond market has very low volatility, just like the stocks. We've seen this before, reported it. This was reported by Bloomberg. It came from the Elliott wave theorist, but we'll show you that the volatility in the bond market has been very, very muted, just like it has been in stocks. And everybody is saying, well, it's different this time. Boys and girls, the one thing I can promise you is that it's not different this time. It really isn't. Regarding that, Jamie Dimon, the CEO from J.P. Morgan, was on yesterday, and he was talking about Bitcoin being the greatest bubble since the tulip bulb mania of 1679, I believe, because I had just gotten out of the third grade that year. I think that's what it was. It was in the 1600s, I'm sure. Tulip bulbs usually sold for about a quarter, 25 cents. But at the height of the tulip bulb mania, they sold for more than $25,000. Now, that was more than enough to buy a beautiful home in Holland, but believe me, those tulip bulbs went all the way back to a quarter, folks. So remind yourself, that was one of the greatest, they still call it the tulip bulb mania, as one of the biggest ever, but they've had some of these others too. You had the South Sea Island bubble when they were, trying to get all the, people to come to the United States. You had the Florida land bubble. That was in the 1930s, I believe. And then you had, the 1929 stock market bubble. And that was also a big one. It took its market 27 years to go back and make a new high after it made its high on September the 3rd of 1929. So when these markets do top and make these big turns, you have to respect it, because it's not a thing to take lightly, for sure. That's what, in my opinion, is. We're going to show the cattle chart here for just a little bit. This was as of yesterday, the day before yesterday's close. Yes, but you're right, Marshall. I'm going to answer your question here in just a minute about the flares. But the 2007 housing bubble was bad, but it wasn't nearly as bad as I believe the dot-com bubble was. The dot-com bubble, the Dow excuse me, folks. The Dow hit its high in January of 2000. The NASDAQ hit its high on March 24th of 2000 and dropped 85%. So that was a big one, that .com. I mean, in my lifetime, we'll never see that. Some of your folks are that are younger will probably see something like this later on. But frankly, that was really crazy. So we'll see if it's going to be something really big. Now, Marshall has asked a question about these flares, these solar flares that we're seeing. Folks, you'll have to go online and check this out. When we get Norm Winsky on, we'll have him. Boy, you guys are really good with folks. I don't know if you folks ever listened to the TFNN, get into the den that they have here. But just as I'm talking about this, one of our den folks has put up all the crashes. I mean, going 1925 Florida. Real estate boom, bust, the stock market bust. I mean, it's just amazing the stuff that they have here. Anyway, Marshall asked a question about the solar flares and stuff like that. I don't know anything about that. They do happen, but we've never made any correlation. Not that we haven't tried. We didn't try, so I don't know anything about it. But what I do notice is the fact that we're having, 2 Class 5 hurricanes in the same year. That hasn't happened since 1915, and at the same time, we're seeing an earthquake, down in southern Mexico, northern Ecuador of 8.1. That's a big earthquake. I think the largest one we've had here in recent time was that one in Chile that was 9 something, but that was in the middle of nowhere. That really didn't really affect it. I don't know if Mar-a-Lago needs to be rebuilt or not, but I do know that he's got government funding for that basically takes care of Mar-a-Lago for the next 50 years. So, well, all right, let's get back to the real world, boys and girls. Let's get back to the real world. All righty, we'll just move on to the next one. We won't get into the old agenda here. I sort of do miss the hurricanes because it takes us out of the political realm, and believe me, that would be something really to behold if we were able to do that. We are going to have Rich Anderson as our guest here in about 4 minutes, so my little jaws will stop working, and we'll have some good questions for Rich, and we'll be able to see, that will be best. You're right. Fletch, you would be Rich. In fact, half of that would be mine, I'm afraid. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're looking to open your portfolio to a world of opportunity, consider the new market-safe emerging currency CD from Everbank. This 3-year U.S. dollars-denominated CD gives you exposure to 5 equally weighted currencies from Brazil, China, India, Indonesia, and Turkey at a time when experts see great potential for global growth. Even better, it features a 7.0 leverage factor, which means you could earn a potential market upside payment of 7 times the CD's performance at maturity with no cap if the currencies increase in value over the CD's term. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. The September 28th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA, FSB, member FDIC.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we have Rich Anderson on the line of Anderson Capital Management. Before we talk to Rich, I want to mention they were talking about John Kenneth Galbraith in his book about how to pick out bubbles and stuff like that. But I actually met Dr. Galbraith back in the 60s at Indiana when I was getting my master's degree in business, and he lectured our class, and he said, boys and girls, he said, let me explain to you that you'll learn more about being in the business world by shorting a contract of soybeans than you will in the 3 years you're going to be here at school. Rich, how you doing?
Good morning, Larry. Doing great.
How's the house? Did it get through Naples okay?
Yeah. Didn't even lose any
good.
Tiles, which is pretty lucky. And the power's on, so that's perfect.
Oh, you got your electricity back then, huh?
Well, yeah. We just happen to be within a few blocks of the emergency services, and that's the first power grid that gets turned on.
Okay, that's
and we're on their grid.
Do you have somebody that looks after the house while you're not there?
Oh, you bet. We have security people.
Okay, that's good. Anyway, let's start out with this chart from Jeff Grunlock of Double Line. Now, this is basically a big ABCD in commodities, and you want to explain to us what he's looking about here? I mean, it looks like we're at a major bottom in commodities.
Yeah, I consider Jeff to be one of the smartest guys going. He was a mentor of Howard Marks, who I consider one of the, Warren Buffett asked Howard Marks, he said, if you write a book, I'll write the foreword. Now, anytime Warren Buffett offers you that, he must think something of you, and obviously, I always like to listen to people who are smarter than me. Of course, that's pretty near everybody, but
stop it.
In any case, that chart just tells you it tells you that opportunity exists. It exists in sugar. We had in the crop report yesterday bigger numbers than everything on corn and beans than expected. But what was lost in all the noise was the world stocks were taken down a little bit in both, I believe, wheat and corn. And any crop problem at any place in the world, and all of a sudden things are going to change. So what that's telling you is that there's opportunity existing. Now, we're at the end of the quarter, at the end of this month, and you have these asset allocation committees that get together that are managing 50 billion or 100 numbers that we can't even comprehend. And so they decide, well, that looks like a pretty good opportunity. Let's put, 2 or 3% more asset allocation into commodities. And they go across the scope of things. And then, of course, the tide's coming in and it lifts all boats. I mean, we saw that 5-6 years ago.
Yeah, we sure did.
And so while the stock market made new highs yesterday, closing highs, if you look at it on a weighted average, a chart that he had in his presentation that I didn't send you, the S&P looks completely different if you weight them for each stock rather than if you just capitalization, and the big dogs are what carry the day. So you may have some flow of funds towards some of these stocks because at the end of the month they've got to show what they own for the quarter, and some of these guys don't want to look like they're on the wrong side of the street. But then after that, I think things will be different, and so much of this is about flow of funds. But it's just showing you that our, I always look at ratios and differentials. Well, so does Andy Heck. I met you, introduced him to me in Vegas here a couple of years ago, and they tell the story. There's opportunity here,
Sure.
And it isn't going to happen overnight. These aren't day trades. These are macro trends that develop over, 12 months, 3 years.
Sure. We have a question from one of our listeners about Kansas City wheat. Now, I posted a chart for Minneapolis wheat up in your area, and that's held relatively well here. It made a new low by a penny from last week, but then it reversed yesterday. So it looks like we're at pretty good support here in Minneapolis wheat.
The East did not take out the lows. The East did not take out the lows.
It didn't.
No.
Oh, okay.
No. Anyway,
right.
I'd have been getting all over that sucker. But it did. The interesting thing, we had these storms, the one we know dear to our hearts, Irma for Florida and Harvey for Texas. So the thing about the soybeans, as an example, they got these pods weighing about 34 grams, and they measure 18 square feet. And the number of pods is just average, yet we've got a record yield. Well, if they take that weight down, all of a sudden that yield comes down, and so they've got ways to change these things. They're going to resurvey acreage in the southeast, because of Irma. They're going to resurvey some of the acreage in Texas, Oklahoma, where the flooding was. And so the crop report in October could all of a sudden give us a curveball. Eventually we'll see that curveball. And, the government reporting, it's kind of like trends in the market. Once they start getting bigger, it seems to continue to get bigger. And so if the resurvey and there isn't any acreage change, they'll maybe continue to get bigger into October. But eventually sometime within the next 6 months, they'll change to not getting bigger. They'll get smaller, and it could be from the weight of the pods. And then all of a sudden things get exciting. But you look for formations, and I look for a retest of lows, and certainly we had it in the wheat, and the wheat didn't. Minneapolis held, but there's a report on September 30th, and a year ago that's what lit things up.
I see. Is there any particular opportunity here in Kansas City wheat versus the Chicago wheat?
Well, we're getting into the planting time for Kansas City, and it was kind of dry until just recently, and so now, they got the moisture to plant. So I don't see it. Nothing jumps off the screen at me. Like our friend Jeffrey, who was on the Merck Forum, was a very big trader. You hide in the weeds with an elephant gun, waiting for that skinny rabbit, and I'm waiting for some skinny rabbits to come by.
Yeah, that's for sure. Yeah, Jeff certainly knew that stuff. I really enjoyed my relationship.
He's on the board of trustees at MIT, I think.
Yeah, I know. He used to come out and visit our family. Yeah, he's a smart guy and nice guy too. You'd never know that. You never know that he was as powerful and as successful as he was. Anyway, Rich, a question that someone's asked is about the December corn. I'll put the chart up here and we'll take a look at it. You'll notice that we did go down and match those. We didn't quite match the lows. We missed it by about a penny or two. But this is looking rather bullish now, isn't it?
I think so. The first thing I look at are retests of highs and lows, and are they successful? And when they retest and they hold above, as corn did, as Minneapolis wheat did, or they have big reversals where Chicago and Kansas City wheat did, they're just telling you they're at value levels, and the crowd's already short, and there's nobody left to sell, and the shorts are waiting to buy it back from somebody else that wants to sell, and there aren't any sellers, and that's kind of what you're watching for. And of course I don't trade sugar, but sugar's another one that's in that group. I only trade stuff technically, and I know nothing about sugar, but I got to believe that hurricane that went over Cuba, don't they grow some sugar down there?
The only thing I remember about Cuba was in 1960 when Winston Churchill said we should fly our planes over Cuba, blot out the sun, and destroy the sugar crop. Hey, we'll be right back with Rich Anderson of Anderson Capital Management in just a few minutes, folks.
If you're looking to open your portfolio to a world of opportunity, consider the new market-safe emerging currency CD from EverBank. This 3-year U.S. dollars-denominated CD gives you exposure to 5 equally weighted currencies from Brazil, China, India, Indonesia, and Turkey at a time when experts see great potential for global growth. Even better, it features a 7.0 leverage factor, which means you could earn a potential market upside payment of 7 times the CD's performance at maturity with no cap if the currencies increase in value over the CD's term. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. The September 28th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. EverBank is a division of TIAA, FSB, member FDIC.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks. We're talking with Rich Anderson of Anderson Capital Management. Rich, we posted the chart of the little piggies in here for October, and we had a nice pattern there up until yesterday when it looked like it brought out all the selling that the October hogs could possibly get. Do you have any idea what's going on over there?
Well, think about all the millions of people in Florida and Texas that didn't have bacon for a couple of days. They're not going to eat twice as much bacon today. There's a lot of protein coming at us, and unlike some of the things we're talking about, like the grains, in the meat business, they have a saying, sell it or smell it.
Oh, I remember that saying for sure. It used to be the same thing. But
so we got all this meat coming at us, and and we had some demand destruction, which the stock market's saying, well, that's going to be good because they'll throw money at the problem. But and eventually that'll be the case. But in the next quarter, it's going to reduce the GDP by, well, Goldman Sachs is talking 0.8%, and it doesn't sound like much, but that when you're talking 3% down to 2%, it's 33%. So then it's a bigger deal. But the bottom line is, that, there was some demand destruction. We got a lot of meat coming at us, and you just can't store it in grain bins like you can grain. It's a different deal, and so that's kind of what we're working through, and that's what the cattle market's working through. Right now we've got the choice and the select. Select is your cheaper cuts of meat, and choice is your next grade up, your better cuts, and then you got prime. Choice was actually trading under select yesterday.
Wow.
That
really was.
What happens when you find a bottom, but we might be a few days, first of all, I only trade off the technicals, and I got to wait for the technicals to set up. But, I mean, the bottom line is there's millions of people that, well, we're still without power or without a home, and they're not going to eat 2 steaks tomorrow, and, if they even have any place to eat it or had any money to eat it with, so we've got this protein problem. So it's for a short period of time, they're raining on these things. Some of the boys that down in what used to be the floor down in Chicago are talking another handle lower, in the high 40s rather than the 50s. And that 1 or 2% change in supply or demand is what moves these markets so amazingly big amounts. And there'll be opportunities, but I'm a little reticent right now, and I see no technical action. Take a look at tests of tops and highs. Take a look at the cotton chart, how it made a higher high the other day and then collapsed. That's the kind of things I look for. You know, when you see technicals like that, that's when I'll trade a market that I don't normally watch, you know, because I'm just looking at charts, and it doesn't matter what the name on the chart is when I see an opportunity.
That's for sure, and not only that.
The stocks, to give you an idea why I'm not as excited about the stocks, I'll try and find that S&P weighted chart and send it to you. But take one of the airlines. They bought, I think, 35% of their stock back. So naturally, their profits have gone up. They got a whole lot less shares. When you've got the divisor that's smaller, it makes, you know, your numbers look good. But they're not investing in if you look at the beige numbers from the Federal Reserve for Atlanta, you know, companies are looking for employees, but they're reluctant to pay more to hire them. Eventually, we're going to have that pop in inflation, and then they're going to realize we've got too much money out there. The Fed's going to have to start drawing that down, and if the stock market's gone straight up as the Fed pump money into the system, and if they pull money out, and that's true here and in Europe, it changes the ball game, and those are the macro things. Then you look for the technicals, but right now the S&P on a weekly basis kind of looks like one of John Hill's yum-yums.
Yeah. Do you remember back in the old days when we used to have M1 and M2 come out at 1:15 in the afternoons?
Oh yeah.
On Friday, and everybody would go nuts with that. I mean, if we would look at those same numbers that we had back in the 70s and where we would be now, the Dow Jones would be at 600. I mean, right. Because those numbers we lived and died by those numbers, and that was back in the old days of inflation, of course, but things have certainly changed now with, you know, the quantitative easing that have been going on. It's very interesting what you talked about with the, as a matter of fact, let's put up this chart here of November beans that we were looking at yesterday for a potential buy. And the soybeans got down to that 944 level and held that 61% retracement pretty nicely, and have, you know, bounced about 12 to 15 cents from that level. That's pretty much what you were expecting, wasn't it, Rich?
Yep. I had told you that we'd probably sell up to 950 or so, kind of fill that trading area, and then pop back up. And I'll tell you what, if we take out this week's highs, all of a sudden the boys will be scrambling and chasing that market back up to 110, roughly. I told you, it's just the 34-gram weight on these pods. They can easily decide, well, man, I guess we were wrong. It's only 33 grams. All of a sudden, that changes the yield a bunch. I mean, that's how small these deals are. And so that's what, and we have no way of knowing that. So we have to just look at the charts and see the guys that do know, they're getting in and they're causing the market action to do this. And that's how you talk to trade.
Is any way these drones can go in and test what the pods and stuff are and things like that?
Well, they can look at the whole field, but you have to, you know, they take an 18-foot square and pull the pods and weigh them. That's how they do it.
Mm-hmm.
Drones can't do that.
And how often do they do that?
Well, they're going to resurvey at the end of the month for the October report. And the only reason, and they could change some of the acreage that's going to be harvested because, this rain flattened a lot of land as you go up north of Florida. It's not like the Midwest where we have tons and tons of acres, but still there's acres. And like I said, it only takes 1 or 2 or 3% change in supply or demand, and the magnitude of the move in the markets is magnified. And then on top of that, you got these asset committees that I'm not sitting on any of them, but I believe they'll be. Yeah. I know they'll be meeting, and I believe they'll be looking at the chart we're talking about and allocating, 2 or 3%. Well, 2 or 3% is nothing, but it is on $50 or $100 billion, and that's the kind of money these guys are managing.
Well, I know it's huge amounts. Rich, we have a question from one of our listeners about the weather pattern that we have in Florida moving higher. Do these hurricanes have an effect on the weather for the Midwest also?
They often. It's like think of it like bumper cars. I can remember a few years back we had a stationary front in the Midwest, and we weren't getting any rain. It was hot. And then all of a sudden we got a big weather formation came through Florida and rattled things. And the one bumper car, the one front, knocked the stationary ridge and changed the weather in the Midwest. So, that's a simplistic way of how I envision it. I'm not a meteorologist, but, or two magnets, and one magnet pulls the other magnet and changes things. So.
Yeah, anytime we have two hurricanes, class 5 in 1 year, we had one in 1915, and I don't remember the crop of that year. I was busy at college, so all I know is that when you have historical things happening, they have a tendency to shake up a whole lot of things. So we could see some wet weather either during the harvest or maybe even an early frost. Who knows? I know it's very cold already in Connecticut.
Take the frost off the table. We can see 10, 15 days out. And where the crop is now, take the frost is off the table. That's not going to be. We could have too much rain when harvest starts, and it delays harvest. But they've got these huge dual tires and stuff, and eventually they get everything in, unless they flatten the beans.
Sure. Hey, listen, thanks for joining us, Rich, and we're really glad you made it through the storm, buddy. Thanks very much for being on our show. You bet. Rich Anderson of Anderson Capital Management. We'll be right back, folks.
Hi, I'm Steve Rhoades, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom OBrien has just announced that he'll be coming to Boston September 30th for a free workshop, The Art of Timing the Trade. Join Tom OBrien Saturday morning, September 30th at the Boston Marriott in Burlington, Massachusetts, as he breaks down his trading methodology and provides you with the tools to become a more successful and profitable trader. Everyone that attends in person will receive a free signed copy of Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. Daryl Martin from Apex Investing Institute will also be presenting for 90 minutes at this free event.
Hi, folks. This is Tom OBrien. Join me in Boston on September 30th as I return to my hometown for a workshop about the art of timing the trade. I look forward to seeing all the tigers and tigresses for this special free event.
All action starts early at 7:30 a.m. with a continental breakfast and wraps up at about 1 p.m. Topics that Tom will be covering during his presentation include quality volume, cause and effect, ABC structures, swing points, and much, much more. For all the information on this free Boston event taking place Saturday, September 30th, visit the front page of TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're going to put a little different spin on the end part of the show today. I posted a chart, a 15-minute chart of the British pound going over the last several weeks, and all I wanted to do was to point out, if you notice those little red boxes that are there, those are basically 70 to 80 point corrections that have occurred. That's basically the harmonic number. It's like a DNA print and for the British pound, and you'll notice that that's what's happening. Now, what you want to watch for is when one of these harmonic numbers expands from 70, like 1.618 out to 130 or something like that. That's trying to see what you're looking at. The same thing we're looking at in the gold market. If you remember looking at that 382 retracement at 1340.50, that's very, very important. And just recently, in the last 15 minutes, we made a perfect Gartley on the 15-minute chart in gold down there at the 332 level. And as long as it holds that level, you still have a slightly bullish bias. But as I mentioned, if we get below 1326 in the gold, that's setting up for an ABCD structure that will take gold back to 1300, I think, without too much trouble. So we do have a gap down from Sunday night, but that's neither here nor there. The key point is the fact that that gold hit the 382 level, and that's the thing to really watch. The bonds still look like they're want to go higher. That means we have, go lower. That means we have higher interest rates possibly in the horizon. So we'll wait and see. I don't know how interest rates are going to go lower when you have to borrow so much money now to help so many people in Texas and Louisiana and Florida and Georgia and even Arizona. It hasn't hit the hurricane here yet, but we could always use a little help out here. So we'll watch that. Thank goodness that our family here at TFNN, Tommy and Tommy O'Brien and everybody there got out with too much trouble, which is really good, and that really is great. So we'll talk to you tomorrow, 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.